Hey everyone, Longacres Finance here with an update to the Dividend Aristocrats for June 2021. The easiest way to gain exposure to the Dividend Aristocrats is to buy shares of the exchange-traded fund NOBL. Let's take a look at how NOBL fared in the prior month. The fund was up 2.45%, extending its strong run this year to 4 consecutive months of positive returns. The fund is having its best run in its history this year. Through May, the fund is up 15.99%, and it has never had a double-digit return after 5 months in its 8-year history. The second best 5-month period for NOBL was in 2016. The fund was up 8.15% after 5 months that year. Looking at the full year returns, 2021 currently slides into third place, surpassing 2014 when the fund was up 15.54% for the year. Since we still have 7 months to go this year, the fund has a chance to have its best return ever, although the 21.03% return in 2017 and the 26.94% return in 2019 are still quite a ways higher. NOBL has only been around since November of 2013, but the Dividend Aristocrat Index has been around for a long time. Since 1990, the Dividend Aristocrat Index is averaging 11.98% annualized rate of return through 2020. That is 1.76% more per year versus the S&P 500. You can notice that the returns for NOBL are similar, but not quite exactly the same. That is because the fund aims to replicate the index, but it is impossible to do so exactly. Additionally, the NOBL fund carries an expense ratio of 35 basis points that eats away at the annual returns. If you're enjoying the video, please subscribe to the channel for more dividend investing videos each week. Going back to the 30-year history of the Dividend Aristocrats, we can certainly see periods of time when the index offered significant alpha. One such period was around the dot-com bubble in 1999. The S&P was enjoying a period of very strong returns in the second half of the 1990s. And while the Dividend Aristocrats also saw strong returns, they trailed the S&P in 1995, 96, 98, and 99. However, directly after the market crash, in the year 2000, the Dividend Aristocrat Index returned a positive 10.10% return, while the S&P fell 9.1% that same year. A similar pattern occurred in 2001. The Dividend Aristocrats were up 10.8%, while the S&P lost 11.9%. And finally, in 2002, both strategies were down for the year, but the Dividend Aristocrats outperformed the S&P by 12.2%. During that 3-year period, 2000 to 2002, the Dividend Aristocrat Index returned 9.91%, while the S&P Index fell 37.62%. That comes out to be 47.53% of outperformance for the Dividend Aristocrats. Now, whether this pattern can occur again in the future is uncertain, but technology stocks are currently at pretty high valuations, after a strong run during the past year. You can't exactly compare the dot-com bubble of 1999 to the 2020 to the moon rally. But one thing has always remained constant in the stock market. Sooner or later, the stock market will have a correction or a crash to reset valuations. During the housing bubble of 2007, the Dividend Aristocrats didn't enjoy quite as large an outperformance as in the dot-com bubble. But nevertheless, the Dividend Aristocrat Index beat the S&P Index by 15.1% in 2008, and then added an additional 10% of alpha over the next 3-year period. In 2020, we did not see this pattern continue. But the market crash in 2020 was different than the prior 2 market crashes. The 2020 market crash was caused by a once-in-a-century pandemic. This was also less predictable than the prior 2 market crashes. Also, the 2022 market crash was the quickest crash in history. The stock market dipped rapidly, but also had one of the fastest recoveries. Okay, let's come back to the present, and take a look at what happened to the Dividend Aristocrats last month. The average return of all 65 Dividend Aristocrats in May was 2.51%. That's 0.06% higher than the return for NOBL. And on a year-to-date basis, the average return of all Dividend Aristocrats is 0.62% higher than that of NOBL's return. The best return in May came from our steel darling, Nucor, which was up 24.65% for the month. The poorest return came from VF Corporation, the owner of North Face and other apparel brands, which was down 9.06% for the month. 31 individual aristocrats beat NOBL last month. 1 had the same exact return, and 33 finished the month below NOBL. Some of the more notable returns in May came from Ben Franklin, which was up 14.03%, Expeditors International of Washington, which was up 14.94%, Leggett & Platt, which was up 10.79%, Nucor, which was up 24.65%, and Target, which was up 9.85%. On a year-to-date basis, Nucor is the absolute best Dividend Aristocrat, with a 93.74% return in 2021 thus far. The next closest best return is 49.68% from People's United. Exxon is also up over 40%, 46.14 to be exact. And Cincinnati Financial, after a strong return in May, has also crossed above 40% for the year. The stock is up 40.13%. 10 Dividend Aristocrats are in the red for the year after 5 months. The worst aristocrat is Clorox, which is down 11.52% this year. Historically, June has been a good month for the aristocrats. with NOBL seeing positive returns in 6 of the last 7 June months. The average historical June return for NOBL is 1.81%, with the best return coming in 2019 when the fund was up 7.11%. Let's jump over and take a look at how some Dividend Aristocrats stock picking strategies are performing after May. Investing in the 10 highest yielding Dividend Aristocrats at the beginning of the year is currently yielding 26.57% return in 2021. That is a cool 10.58% better than the return for NOBL thus far. Each of the 10 highest yielding aristocrats is up thus far this year, with People's United being the best stock of these 10. Of course, on top of this juicy return, investors can also enjoy a very attractive dividend yield along the way. Investing in the 10 fastest dividend growth aristocrats at the beginning of the year is currently yielding a 16.12% return in 2021. That is only 0.13% better than the return for NOBL. Not quite as nice as the highest yielding strategy, but nevertheless it is outperforming the Dividend Aristocrat fund. Investing in the 10 most undervalued Dividend Aristocrats at the beginning of the year, based on dividend yield theory, is currently yielding 16.97% return in 2021. That is 0.98% better than the return for NOBL. Also not quite as nice as the highest yielding strategy, but it's nice to see all three options outperforming the NOBL ETF. Taking a look at just the month of May, we can see each of these strategies came up short of NOBL. The fastest dividend growing stocks had the best return for the month, outperforming the highest yielding aristocrats by 0.01%, and the undervalued stocks underperformed the other two strategies by almost a full percent. There you have it, the Dividend Aristocrat update for June 2021. Let me know if there is any additional information about the Dividend Aristocrats you guys would like to see in these monthly videos. Thanks for watching and see you next time.